Hello, Simon Jackson from learnloads.com here. Today I'm going to talk about doing an internal and external audit of a business. I'm going to explain how you can use these audits to create something called a SWOT analysis to suggest what the aims and objectives of that business should be. An audit just means looking at where a business is today and what might happen to it in the future. This word audit is used by accountants when looking at finances, but we're using it in a much wider sense here. It's about stepping back and looking at a business overall, including both financial and other information. As I'll explain in this video, a really useful way to build on this audit is to create a SWOT analysis. I used to think SWOT was about guys in big bulletproof vests and sniper rifles, but that's SWOT with an A, isn't it? Anyway, in business terms, SWOT stands for the strengths, weaknesses, opportunities, and threats surrounding a particular business. Okay, so let's look in more detail at what internal and external audit are. In the real world, senior managers need, from time to time, to spend time trying to look hard at, firstly, what is going on within the business. That's what's called looking at the internal environment, doing an internal audit. And secondly, they need to look at what is happening outside the business that might affect it, what's called the external environment. This is an external audit. And where can we get data for these audits from? It could be from customer surveys, employee surveys, financial accounts, trade associations, and studying what competitors are doing. You're going to need lots of primary and secondary data about your business performance. Once we have this data, when we've done our audits, then we can begin to do a SWOT. So what is a SWOT? Well, step one, identify internal strengths and weaknesses. This might include looking at the skill level of staff, the quality of products, how cost-effective operations are, current levels of profit, and the reputation of the firm, for instance. Strengths are factors that are likely to enhance performance, such as having a productive workforce, cost-efficient operations, or high-quality products. Weaknesses, on the other hand, are factors that are likely to have a negative effect on business performance, such as poor quality products or poor customer service. Remember, strengths and weaknesses are about internal factors. Step two in a SWOT analysis is to identify opportunities and threats. An external audit is about the opportunities and threats a firm faces within the external environment. In other words, the world in which it operates. The external environment is pretty well beyond the control of any one business, but that doesn't mean that it can be ignored when objectives are set or important decisions are taken. External factors include political, economic, social, technological, legal, and environmental factors. These all play a big part in shaping the demand for products. Opportunities are external developments that could help the business. For example, new technology, a fall in the market price of raw materials, or a helpful consumer trend in the marketplace. Threats are external factors that are likely to cause problems. For example, an increase in government regulation, which would lead to higher costs, or a fall in average consumer income, which would lead to lower sales, of course. Don't forget, opportunities and threats are external factors. As a business student at any level, doing a SWOT analysis of a business that you're studying can really help you see the wood for the trees. If you have a few bullet points under each of these headings, you've got something that you can play around with in a way. You can look for ways in which these SWOT headings might interrelate. So for instance, maybe your strengths are something that fit well with market opportunities. For example, if a strength of a computer manufacturer is a popular range of mass market inexpensive laptops, maybe the company has transferable skills and assets that would help it take advantage of the growing demand for tablet computers, and that's a market opportunity. So the strengths are kind of fitting in with the market opportunity. So the company objective in this case, suggested by the SWOT, might be, as I say, to develop a new range of tablet devices. A SWOT analysis then is not just about sifting through data and slotting it into 4 categories to make this neat little grid. It's a tool to help you turn a pile of things you've found out about a business, whether that business is in a case study that you've been set as homework or something, or on an exam paper. You can take that pile of information into at least the beginnings of an idea about what the business needs to do. The longer you study business, the more you can benefit from drawing up a SWOT. It needs a lot of thought and a fair bit of practice, but it can be a really useful way of organising your thoughts. To learn more, see the Learn Loads business range of ebooks on Amazon. Just follow this link. You can read about audits in a little book called Management and Leadership, or just go mad and buy the whole Year 1 business book. Oh, and you might like to visit the Learn Loads YouTube channel. There's dozens of videos to help business students there and new ones coming out regularly. So subscribe, it's free of course, if you haven't already. Thanks a lot. Bye.